Good afternoon and welcome back to my channel. My name is Donna Smirniotopoulos, also known as Angry Taxpayer, and this is part 2 of low-income housing tax credits. The program, as I said in part 1, dates back to 1986. The program was created to give incentives to developers and banks to build and finance low-income housing. However, the net cost of the LIHTC program is approximately $9 billion per year, and these costs are, of course, passed on to ordinary taxpayers because the IRS has to be able to recoup that money somehow. So I'm going to read to you something from the Tax Policy Center about LIHTC, so if you pardon me for looking away. As I said, the LIHTC program is estimated to cost around $9 billion per year. It is by far the largest federal program encouraging the creation of affordable rental housing for low-income households. Supporters see it as an effective program that has substantially increased the affordable housing stock for more than 30 years. Critics, however, and I'm a critic obviously, argue that the federal subsidy per unit of new construction is higher than it needs to be. Would agree with that, because of the various intermediaries involved in its financing: organizers, syndicators, general partners, managers, and investors, each of whom are compensated for their efforts. So we have been talking about Wall Street Place Phase 1. Common Council is considering a proposal to award preferred redeveloper status to JHM, which is a company belonging to John McClutchy and his family members. And they will be compensated approximately $5 million if they are chosen as the preferred redeveloper for Wall Street Place Phase 1. So that's a lot of money, and that money isn't just falling out of the sky. That's our money. In addition, Wall Street Place Phase 1 will pay approximately $175,000 per year in property taxes to the city of Norwalk. Now, the proposed development will have 101 units, all of them designated affordable, and affordable in quotation marks, because these things are determined by state regulation and state statute. They may not, in fact, be affordable, but they meet the affordable designation as defined by the state. Most of the units will be 2 and 3 bedroom units, so we are likely to add about 100 new students to the Norwalk Public Schools. So a conservative estimate of the cost of the new students is about $1.75 million per year to educate, and they will be paying 10% of that in property taxes. So again, you have to ask yourself, who is going to make up the difference? And ding, 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 the answer is you and me. So I hope you have found this informative. Please like my channel and share this video with your friends, and ask the candidates where they stand on this project and on low-income housing tax credits and tax abatements generally. Thank you, and have a great weekend.